Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for an impulse to the upside, working on this wave 2 where the common target area for your wave 2 is the green box between 64.3k and 59.8k. Preferably, this wave 2 is ending after the 0.382, which is today, taken from the start to the end of wave 1 to compare wave 1 in time with wave 2 in time. Nonetheless, based on the structure to the downside here, the preferred scenario is still a bigger 3-wave corrective structure, after which we then expect continuation to the upside. In this wave 2, we are then looking for a zigzag, a 5-3-5 wave structure with a leading diagonal in wave A. 1, 2, 3, 4, 5 wave move, looking for a bounce to the upside in a wave B, and then another impulse down in a wave C. The invalidation for your diagonal would be for price to move to the downside and touch 62.2k. What is good to see in this diagonal is that price is making lower lows on lower volume. The common target area for your wave B is between the 382 and the 886 Fibonacci, 67k to 71k. Inside this area, we have some additional interesting areas of resistance, the blue boxes here. First of all, 66.6k to 67.1k, 69.1k to 69.7k, and 70.8k to 71k. After B, we look for an impulsive move down in a wave C. If price can make it to around 69k for wave B, then the common target area for C is between 61.6k and 59.7k, which includes this blue box over here between 60.5k and 60.9k. The most interesting psychology scenario is an expanding flat where we look for an A, B, and then an impulsive C to the downside where we move up, take the all-time high, but then find resistance, look for weakness, and then impulsively move down below 56k, where of course people are going to be scared, looking for price to continue down, but instead we then look for price to continue back up and continue the bigger trend. The common target for your wave B is between 77.9k and 80.4k, and inside wave B we then look for a double zigzag in a wave W, 3-wave corrective structure in a wave X, and a zigzag to the upside in a wave Y. The common target area for your wave X is the white box, 66.1k to 62.4k, and you don't want to hit the 0.7 as that would reduce the probabilities for this scenario. If price would move to the upside and touch 84.5k, the probabilities increase to continue towards the upside. Inside this wave X, we then also need to count a 3-wave corrective structure, which is a flat in this case. A 3-wave A followed by a 3-wave B and a 5-wave diagonal to the downside in a wave C. Here, preferably, your diagonal is not yet finished because locally it is difficult to count this move towards the upside as an impulse, and the probabilities are still higher to take out this low. Therefore, we want this wave C and wave 5 to finish at a later stage for then a bigger ABC structure to the downside to finish this diagonal, not touching 62.2k, followed by an impulsive move towards the upside, because after this flat ABC, we want to count a 5-wave impulsive move towards the upside. If we then go to the lower time frames and talk about why the probabilities are still a bit higher to move below this low at 64k, it is because an impulse to the upside has low probabilities. The only scenario that is left for the bulls here is a wave 1, 3-wave 2, and then continuation up in a wave 3. However, in wave 2, you then have a flat 3-wave A, 3-wave B, 5-wave C, which preferably ended over here, as we could count a nice 5-wave move to the downside, but now we made another low, which is actually decreasing probabilities for a flat here, ABC, decreasing probabilities for your wave 2. What also decreases probabilities is wave B touching the 1.618 here at 66.3k, as the 1.618 for a wave B is a rare target taken from the start to the end of A, lowering the probabilities this move to the downside is a wave C, increasing the probabilities that this impulsive move down is either a wave A or a wave 1 for still lower prices to come. The bearish scenarios, therefore, are scenarios where we are looking for that low to be taken. Here we have an unfinished diagonal, 1, 2, 3, 4, looking for an ABC to the downside in a wave 5. More locally, we therefore look for a wave 1, 2, 3, 4 and then a 5-wave structure, ending in the common target area for your wave C between 63.4k and 62.4k, but of course the invalidation is very close then, 62.2k, and we don't want to hit the invalidation in this scenario. The other scenario is a flat where we already have a finished diagonal, 1, 2, 3, 4, 5, and then a 3-wave A looking for a 3-wave B, and then a 5-wave C towards the upside. Has to be said that this scenario does look better based on the local structure here towards the downside, with the potential for an ABC, bounce in B and move up for a wave C. The common target for your wave B is the blue box here between 63.4k and 63k, looking for a C to the upside, where the common target is between 67k and 68.6k. And if we then look at the probabilities of the different scenarios, then on the daily time frame the probabilities for now remain higher to take the all-time high first before taking out 56k first. On the 4-hour time frame, the probabilities are higher to still look for a bit of a bounce soon, but if we do lose 62.2k, the probabilities do increase for a further move towards the downside, and on the 1-hour time frame, the probabilities are higher to take out the low, which means that if price is moving down on volume, we have to wait for a range to form, look for some proof of support, because if price is moving to the downside on a high amount of volume and it's going to be a straight line, of course I will not have any interest in potential longs, but if we can hold this area, create a bit of a range, look for some signs of strength as well, yeah, we could have a bounce towards the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.